Andy today. It's maybe hopefully going to be another busy day with a bit of CPI coming out from the US amongst other bits and bobs. So we're going to take a look at that in a little later. Morning, Kay. How you doing, mate?
Morning, Ryan. Morning, everybody. Yep, doing all right. Ready for the next most important data point in our lifetime.
Yep, it's always one bigger than the last one. They get bigger and bigger and bigger.
And by the way, congratulations on England for qualifying for the Euro finals. Yeah, I mean, well done.
Yay! It's the most underwhelming tournament an England team I've ever seen in my life. I'm really a bit meh about it all. Normally I'll be buzzing, but one of my kids fell asleep. One of my kids went and played his computer halfway through the second half, and the missus sat on her phone. That's how exciting it was. And at the end of it, she just went, "Oh, did they get through then?" Yeah, all right, let's go to bed then. That was it.
At least you didn't miss Watkins' goal. That was a beauty.
Oh yeah, that was a fantastic goal, but the only highlight of the half, really. But we're in the final, and there'll be a few more beers sunk on Sunday. And again, bloody Sunday. Fancy putting it on a Sunday. So I might be late in on Monday, mate. So you might have to cover on Monday. I've given you forewarning.
No problem. But don't count on me to come and clean up all the beer that you have thrown around the house, right?
I'm not throwing any beer, not until the goal's confirmed. I'm not wasting any beer on that sort of stuff. Seen too many pints go up in the air and then VAR rules the goal out, and it's a waste of beer, in my opinion. Right, anyway, away from the football, let's get on to some news. Going to start in Japan, where we've had a bit more of these stories out about what the BOJ is going to do with its bond buyings. Other sources have said that the Japanese banks have urged the BOJ to halve their monthly bond buying from current 6 trillion to 3 trillion. So this story rumbles on and on and on and on and on. No real change to the numbers that we heard before. Talking anywhere 2 to 4 million has been the sort of the roundabout figure that we're talking about for when they're going to cut. We won't know until we get to the July meeting. So we'll wait and see about that. But on the wage front, there's been some news or potential news because a regional bank, a regional lender, is looking to increase its staff and pay top dollar or top yen wages. One of these regional banks is looking to pay the sort of salaries that they get in mega banks, that they pay in mega banks, some of the big banks, because they want to hire traders and specialists. So this cycle of wage gains and hiring is all proving a bit positive at the moment. If that continues, that's going to play out over the months and next fiscal year with higher wages, and get the Bank of Japan seeing inflation moving the right way. So that was a piece thrown up by Bloomberg. Coming over to the UK, we've had some GDP data out this morning, which was all looking tickety-boo. GDP up over expectations on the month at 0.4%, also up on the year 1.4%. Nice, healthy looking numbers, although this is data for May, which included the bank holidays and whatnot there. So that was a bit of a boost there. Whether that's going to wash out in June's numbers, I don't know. What is looking fairly positive, though, is the 3-month rolling GDP number coming in at 0.9%. So that is now March, April, May, and then when we get June's numbers, it'll be April, May, June, and that will be the entirety of Q2. So it's going to have to go some negatively in June to bring this number down significantly. So it's looking like Q2 will be another positive quarter for the UK, and that'll be something that the new government can claim credit for, even though they've only had their foot under the table for 5 minutes. But that's politics for you. It was okay on industrial production, manufacturing production, positive numbers, not quite as much as expected, but still pretty well. It's plus numbers, so that's the main thing amongst that. So overall, yep, still some positivity. Green shoots not yet disappearing in the UK, but not yet fully blooming either. So they continue to grow. All this wet weather, they're not ready to bloom, I can tell you. We've had those other two BOE members out and squawking. BOE's Peel was one we were eyeing to see whether he was in the close to cutting camp. One of those voters from the last Bank of England meeting. He said that well, the whole subject matter of his speech was pretty much about the Bernanke review and, you know, what they should do and the mechanics of monetary policy. But he did say in the absence of any big new shocks, it'll be when rather than if the characterisation of prospective bank rate cuts still seems appropriate. So hinting that rate cuts are a question of when rather than if, which is no real surprise. He says annual services price inflation and wage growth continue to point to an uncomfortable strength in those underlying inflation dynamics. So again, hinting that inflation, services, wages aren't doing enough potentially to get him looking at cuts just yet. But then he said it's an open question on whether it is now time for rate cuts. But then said he's reluctant to be drawn on whether he is cautious or not about cutting rates. So overall, no real hint that he's closer to rate cuts, but a lot of can kicking and fence sitting in those comments, not really giving anyone any real idea what he wants to do. Right after that, traders took the odds of a BOE rate cut to less than 50% for August. Later on, we had Mann, who's one of the big hawks over there, and no real surprise from her comments, says the supply side of the economy is growing very slowly. We still see labour market tightness. Wage growth is still far away from being consistent with the inflation target. We have to see disciplining of service sector price growth, and said until she sees some deceleration in service prices, I'm not in a position to cut rates. And that the 2% inflation we see now is a touch and go. It will be above 2% for the rest of the year, and that matters for my decision making. So I think we can take that, Kay, that she's not going to be voting for a cut in August.
No.
We'll make appeal. Don't know what he's going to do either.
No, that's one where that's a difficult call on him. I think Mann is the BOE's Bowman, right? She's not ready to cut. She's probably going to be the last one standing to vote against cuts, even when all the others go. How do we express this? This is I would say in a way higher for longer, but it's a bit like I'm going to compare it to the Fed, and I'm not saying this is negative sterling by any means, because I think for as long as the Bank of England holds, and they are at 5.5%, which is a high yielder amongst the majors, right? But it may be that just one or two data points take them over the edge, you know, and it's a bit like the Fed. Now, if you put the data on top of it, and as you said, it's May data, but still they are doing better in the UK than, for instance, in the Eurozone. I would think it keeps the sterling within the better currencies of the broad basket, if we want to view it that way. And it's all going to be very limit border to see what's going to happen on the next BOE, but could be that they just those speakers right now, they just killed the when is it, the 1st of August meeting, right?
Yeah,
we need to be very careful. They may not get before into the summer.
Yeah, well, we get CPI next week, and you know, like we've been seeing all through every central bank, you know, one bit of data goes the right way, and everyone runs the other side of the boat again. So these expectations for August could change pretty quickly. But we're still, I'll repeat myself, we're still trading the calendar, not if they're going to cut. It is exactly as Phil says, it's the when, not the if. Unless the data really does turn the other way, shockingly. So, yeah, the quid was well buoyed this morning. It popped a bit on that GDP data, but came back pretty quickly thereafter due to the potential skew of the May holidays, but it's continued to gain out. But we'll look at prices in more detail in a moment. Over in La France, the Bank of France Governor Villeroy says the French budget remains set to be unveiled in September, but is hoping the political situation can be clarified by then. I guess the question is who's presenting the budget? Okay, there's no one in charge over there at the moment.
No, I saw Macron starting to have discussions with many people, but it's still very unclear about who is going to get in there. And it's really unclear. I don't have a view on who exactly is going to especially present that budget in a while. No idea. Honestly, no idea.
No, so we'll have to see what happens then. If they can't pass a budget or present a budget, the EU's not going to be happy. And
the rating agencies.
What, sorry?
The rating agencies are going to judge.
Yeah, I was about saying the rating agencies might pipe up again on the back of that. And this will be the mess that we've been talking about, the longer run mess that comes from hung parliament. So, yeah, we'll worry about that news later on. Bit of US data out yesterday. There hasn't been an awful lot this week, but we did get some. Nothing to worry about. Wholesale inventories and sales looking pretty good. So that wasn't anything to write home about. Again, seeing some parts of the data weakening, other parts looking okay still. So nothing to write home about there. Powell's up for his second stint in front of the Beaks. And it was pretty much a rinse and repeat. I didn't even watch it, but just picking out some of the comments. He said that striking a balance between ensuring inflation comes back to the Fed's 2% goal while also preventing the sharp rise in layoffs is the number one thing that keeps him awake at night. Trying to make decisions that give the best chance for that to happen. That is the only thing I think about in the wee hours. They went on to say that the labour market was not a source of broad inflationary pressures for the economy, but that we had seen considerable softening in the labour market. So it's been matching his comments thus far. Fed's Cook was out, not a lot from her, said the US data is consistent with a soft landing. Some of you, I know some of you will find this interesting. The Fed have issued a notice saying that Citigroup is in violation of its 2020 enforcement action and has failed to implement controls to manage ongoing risk. That's according to sources. Citigroup never out of the headlines, but it seems they're getting ticked off by the Fed once again. Over in politics, and Axios had a sources piece out saying that Senate Majority Leader Chuck Schumer is apparently putting his hat forward to replacing Biden as the presidential nominee. That was later denied by the man himself, saying he supports President Biden and has shared that view publicly and privately too. But meanwhile, the wolves are still circling, or wolves, vultures, whatever you want to call them, are still circling, calling for Biden to pull out and be replaced. So that's the ongoing saga there at the moment. Kay, anything else for us?
No, just well, just a bit of I wasn't thinking about those NATO meetings, and it seems that Poland is getting dragged in more and more into what may end up being a bit of an extra stress situation, because they now talk about this new US base in Poland. Poland concentrating more troops along the what is it, the Belarus border also, and
Yeah.
Yeah, it all looks a bit, and we know how Russia will react to it, right? Still, I mean, it's not something that drives the markets right now, but you never know. An accident can happen. Some misplaced shell or so. It only needs one to lighten up the conflict in another area. I think so. Just keeping an eye on that one. For the rest, no, I think you covered everything. Yeah.
Cool. Thank you very much, mate. Right. Well, let's have a look at what's going on. Paul's asking about Guppy. It's a bit of a washing machine this morning. I think yen pairs are doing a lot of heavy lifting this morning, and they're pulling around the majors as well. I did have a look at the BOJ's near nominal effective exchange rate. It's basically their yen index they produce every day. A week ago, it was trading at 75.15. Today, it's trading at 74.77. It keeps heading lower. Now, this is, as I say, it's the yen index, if you like. So it gives them an overall view of what's happening in the yen. So it's not just dollar yen they're looking at; it's all yens they're looking at. And as you can see, all yens are pretty much breaking to new highs, no matter where they are. That's keeping some of the majors up as well. Dollar yen is caught in a bit of cross currents because it's not really making new highs. So it's all a bit of a mess at the moment. You know, we're seeing dollar weakness, you could say euro dollar cable and the like, but then you've got dollar CAD that's up a bit. So again, that tends to indicate, you know, a bit of influence from elsewhere other than the dollar. So obviously, we've got this big CPI data coming out later, so the market's going to be, jockeying around ahead of that one. For the yen and dollar yen over this CPI, I'm in two minds. I'm beginning to feel like this data, or like dollar yen, is just waiting to get over this data hump for two reasons. If it's hot, obviously dollar yen's going to rise because the dollar's going to rise. If it's going to Can it break out of 162 in these highs? That's the question. On the flip side, if we get softer data, we're going to see dollar yen sold off. But then, given that yen is still weak everywhere else, is that dip going to be bought pretty quickly? And then we go on to new highs. You know, why buy it now when the chances are, or you've got a chance that you might be able to buy it lower and take it higher. And if you don't, and it goes higher anyway, or if you're long already, it doesn't matter. You're still going to make money. So I'm in that mood where I think whatever happens, dollar yen could go higher one way or another, be it after a dip or straight away. And if that happens, I think if we get a bust through these prior highs and up through 162, I think we could be off to the races again. And then, you know, the Ministry of Finance are going to be bang all over it. Bit surprising, Kay. We haven't had any comments for a day or so. Are they all on their holidays? There's some holidays now.
When it's quiet, is it dangerous?
Yeah,
That's
the thing. That's the thing.
Yeah, the deafening silence. We were talking about that this morning again in the chat room. We talk about those yen pairs every day, Paul. It is the thing where it's still expensive to be long yen for longer, and I don't think that, barring those who have nerves of steel and who are in longer term carry, who are laughing their brains out right now. If you look at the retail community or the short term community, I don't think that many people are short yen, because it gives this mixed feeling every morning of having missed a big move lower in the yen, or being too high in all those yen pairs to chase now, and but it's still very, very tough to stand in its way. I mean, overlay the yen pairs with the S&P. I think you're not far from, in different degrees or percentages of moves. I think you're not far from where. From what the yen is doing, and also with the Nikkei shooting higher, it's typically weighing on the yen as well per correlation. This is just how the correlations work, and Yeah, are we close to a top? That's always the question. If US CPI comes down quite a bit this afternoon, we may see dollar yen come off, but then you probably are going to see the equity markets rally, and when dollar yen has done its bit to the downside, you will probably see yen process coming back bit. So yeah, it's a difficult situation if you're not in a position in the end. But I'm still not there, and really not willing to fight it because, and Paul specifically speaking about sterling yen. If you look at sterling yen, you walk in every day and it's a big figure higher, basically. This is one hell of a move. You know, we have done nearly 10% in a month and a half's time. This is a big move. And it's, yeah, I really, okay, the small trades that I've done have still been short yen, but it's more jobbing trades or scalping as people call it, but because I still can't stand in front of it. I want to know what the Bank of Japan is going to do at the end of the month. What I do think though is that towards the end of the month, it won't be good to be very short yen because the market is probably going to start to think about, oh, okay, next Bank of Japan meeting, what are they going to do about the JGB? They could hike rates again, especially looking at the level of the yen. It's not because of the level of the yen, but the level of the yen is going to allow them to hike rates. The market is probably, or the commentators are probably going to go all panicky and say like, oh, look, they want to hike rates because the yen is lower. I think that the other way around is going to be a very valid argument too. But yeah, here we are, and do you really want to sell sterling yen at 208 when it was 200? What is it? A week and a half, 2 weeks ago. So no, I'm still not standing in front of this trade. Still not.
Yeah, still very difficult. Yeah, Andrew, I'll have a look at the FTSE in a moment for you. Ali, you're getting busy again in euro and the pound, and also euro pound as well. So I'm going to flip it around on you today, mate. Your long euro sterling at 84.23, stop loss 83.83, TP 84.53. Review your trade. What do you think? I'm testing you now, mate. What do you think I'm going to say about that trade? You tell me what I'm going to say. Let's see if you've been learning for all these months you've been watching the show, what I would say about that trade. And then, because if you can answer that question, then you don't need me to review your trade. You're already in the same mindset. So just tell me what you think I would think of that trade. By the way, I'm short euro sterling, but for different reasons. And we'll come back to that in a moment. Let's have a quick look at the FTSE. See what's going on there. Not a lot, as always. It's not exactly the fastest mover in town, particularly compared to all the other stock markets, which like to go on and smash up to record highs. Obviously, different composition of the FTSE in this one. That's the thing you got to think about first and foremost, Andrew. You know, a lot of international companies in here. Yes, there is that potential effect from the moves in the pound. You know, if people repatriating profits and that sort of thing has an effect on it. It's still looking good. The one thing with the FTSE is that it's not very volatile. So, you know, S&P's going to the moon again, just a one-way train. This one, we're not getting up towards those highs. So you've got a bit of definitive levels coming in here. Obviously, the 8K level is, you know, a bit of a psychological level. We've got a bit of support coming in at 8,100. So you know where you're wrong if you're trying to get on longs in this one. Ultimately, you need to move back above that high, 84.74. Just looking at it a bit closer. So you got a bit, let's put a couple of lines in there just to make everyone happy. So we got one in there. Let's draw it back there. And we can stick one in round about there, give or take. doesn't need to be exact. So that's your intra range, if you like. We've been sitting in that for what, month and a half so far. That's after making that high and having the bust up through this resistance down here and then up through the 8,000 level. What are you looking to do with it, Andrew? Are you long? Are you short? Are you hoping it's joining in and shooting for the moon? But yeah, it's ranging at the moment, and as I say, a bit of a strange one. It's not even following some of the others like the DAXs and the CACs and the whatnot. Even with all the problems in France, this one is trying to claw back what we saw, the losses back, but not doing too much. Again, just a bit of ranging from some of these European indices at the moment. DAX is the same, not taking out its highs. And I spoke about this on F.A.C.E as well, just quickly. I think we are starting to see a bit of divergence between the US stock markets. Taking the Dow over, the S&P. S&P's off and running. Nasdaq's off and running, but the Dow is just holding back a bit, and so it might just be we're seeing a bit of influence, more worries about economy, and more. I don't know how to call it. Non-tech stocks. Non-tech stocks. Sorry, mate.
Traditional versus
traditional. That's the word of it. I've been looking
traditionals
for
versus the flamboyant ones. I think that's and that's where you see the European bourses being a bit slower than the ultra dynamic US markets, barring the Dow and the Russell, perhaps.
Yeah, exactly. Right, let's have a quick look at what's coming up from this CPI data, just so we all know what's going on. So headline CPI is expected to fall to 3.1%. Core expected unchanged at 3.4%. Now, just to reiterate, this number hasn't been below 3% since way before the inflation blast. We had this big move down, and it's sat under 4%. This will be over a year where it hasn't gone lower than 3%. So that is sticky, irrespective of what PCE is doing. Because this number, while PCE may be more important to the Fed, this is the first number for June. So the market is going to move on it, and PCE doesn't tend to be as volatile. So whatever happens here, it's potentially going to be a price mover. Now, I think if we get a two-handle on CPI, that's going to get the market ramping up. Probably September bets for the Fed, because that will mean we've finally had a breakdown. You can't put tech on data points, but we've been holding 3% for a year. If we get under 3%, it's going to be a potentially significant move for CPI, for inflation, and I think the market will take note of that. But also see what happens with the core. If it stays sticky while this drops, that'll be a little bit of an offsetting effect the other way, so a little more towards the sticky side of things. What are you expecting price move wise, Kay? It's difficult, isn't it? We've come through so many CPI reports and data and everything else, and
and they're all looking at the second, third decimals for the rounding, and everything. I mean,
trying to find an excuse.
I just hope that all those people looking for the second and third decimals are getting it around their ears, and we get like a really at least a 0.2 or so move somewhere. If it comes out as expected, CPI will still be, as you say, above 3%. The core at 3.4, so that is going to keep the narrative for higher for longer intact. But and I'm going to immediately add, and I've been saying that already a good number of times. I think that the jobs market now and employment has caught up with the importance of inflation. So if we get an as expected number, I think we can see a little bit of a knee-jerk reaction on the dollar, but it may just stabilize around levels. If that CPI comes back in at 3.2, 3.3%, the headline, I mean, and closer to what we had before, that is going to perhaps have people have to rethink a little bit short term. because that will mean that some of this continuity, even if it is like sticky and very, very, very slow, breaks. So that may be one. And I fully agree with you. If we get a two handle, that's going to put the wheels in motion, I think, for the dollar to trade lower again. And then I'm thinking, and we will look at the prices, of course. And then I'm thinking about stuff like the cable and perhaps Aussie dollar breaking up, Kiwi perhaps catching up again as well, and even the euro dollar will likely rise. But if we look at it in order of importance, I still think that cable is one that is looking juicy if we get a lower CPI print. Yeah.
Yeah, I think 129 will be quickly toast. If it's not toast already, by the time we get there, only 23 pips off it at the moment. So yeah, I think today it's a difficult one. I'm more dollar bearish than I have been for a while, but I'm not ready to jump in with 2 feet yet, and we still got the risk of data going the other way. So hotter CPI, then it brings a bit more of a dollar rally that's a bit more sustainable, lasts a few more days until the next data point. So I'm considering again. I think selling the dollar rally is still the way forward, but I think you need to be a bit choosy where you do that. Levels within sort of 20, 30 pips of anywhere is not going to cut it. Look at something like cable. Said, we could be up at 129, and cable is maybe not the one you want to try the short against unless you're just playing a big figure trade or an excessive move up to if we blow through and head to 130, I might tap that for a big figure trade if we get straight up there in one go. But I wouldn't be looking to short it, or wouldn't be looking to run with it too much. And then the same for other dollar pairs. If you're gonna sell dollar rallies, sorry, I'm getting all mixed up again now. Sorry, if we get a dip in cable, we're more likely to buy a dip in cable than sell a rally because it's been heading higher. So, strong dollar stuff, get a dip. I doubt we'll get down there 127s, but if you get down to 128s and it holds, and you want to fade that dollar strength, that's the way you're going to do it. But on the other side, yeah, I don't know where you pick. What you still keep an eye on Kiwi dollar K?
Yeah, yesterday I bought it again, but I already sold half out on the Kiwi. You're talking about the Kiwi, right, Ryan?
Yeah.
Yeah, well, I mean, I don't like what's happening in the short end rates in Kiwi, and they're keeping the Kiwi from going back up, whether it is versus dollar or anything else. In fact, it's not my preferred. My preferred on a continuation trade is still going to be the cable. Although, as usual, we slice and dice. You and I. I've taken some off, so I'm not as heavy in the position as I was before. But I'm ready to add again if the CPI really comes out below. I think buying a 128.95 figure break could be the one, because that's going to be the gateway to 130. But in the Kiwi, to come back on that picture, this thing is going to have to break one day or another through that 61.45.55 for me to be comfortable again with what's going on. For as long as we mooch around here, it could just be that more of an underperformer versus the rest. So it's not my preferred anymore, even though it has relatively high interest rates. It's a market that has to go, and it has to go. It has to take off in one go for it to be lasting. It's sometimes a bit of a strange one, that Kiwi. So I'm keeping that one light, tactically very light.
Yeah, exactly. Just one more before I punch it over to you, mate. Just to keep on the same conversation. I'm still short a bit of dollar CAD, and I just don't like it. I think I'm going to fold this up before the CPI data, because if it is hot, as I say, we do get a bit more dollar buying than we've seen of late. I don't want to be stuck down here. I did manage to get a little bit off yesterday on a dip 36.09. I'm short at 22, so 14 pips on a little bit of it. I might just cane it in, because as much as I would have liked to have added to shorts, I think hot CPI could just swing the boat around again, the pendulum again, and we just get a little bout of dollar strength that maybe pushes up towards these highs. So I'd rather be out here and try again up there. I'm still running my sell stops, so if it is weak enough, then I'll be looking to catch a break through 135.80s if it does head that way. But yeah, just position yourself, find out where you prefer to trade, maybe give yourself a bit of room, look at the wider levels rather than anything that's really close to, because as I say, we could get a little bit of a sentiment shift short term, as I say, till the next bit of data. Right, Kate, going to bring it over to you, mate.
While you're on that dollar Canada, and I was thinking about those in Canada as well. It's not your perfect dollar trader because of the proximity to the US. I think there are cleaner dollar trades than the Canadian dollar. The Canadian dollar, you need to trade it for what it is itself, and I think you're very right in somewhere doubting, unless it really breaks that 135.90, 136, the figure again. I don't think it's the perfect dollar trade right now. And there is and as you say, if CPI comes in a bit hotter, this one looks a bit prone to me to go for a bit of a stop run higher before reassessing again. Yeah, I think we really need to respect that 135.90 figure. If it breaks, fine. Then we're probably going to trade lower. But for as long as it hangs around here, I think Canada is more driven by crosses than the dollar cat right now.
Yeah, I agree with you. It's probably not the ideal dollar pair to trade, but I tell you what, technically, it's looking very good. I mean, you've got really defined levels. We've got this, take the wide range, you've got this 36, 35.90, and then you got the 38s, into the high 37s, 38s. Technically, it's been playing really nicely with the levels. If you sold up around here, you've done all right. If you keep buying down here, you're doing all right. So yeah, fundamentally may not be the best trade. Technically, it is looking pretty good. You've got very well defined levels, and that's why I'm liking it at the moment more so than anything else. Right, let me whack it over. All yours, mate.
Cheers, mate. Okay, first of all, euro sterling, and I saw you, Ali. You mentioned the monthly moving average on the euro sterling. That's of course one that is not always. I mean, it depends what those spike high lows that some have taken, but I have it rather around 84.5 right now. You see, upper left, it's 84.48. I mean, other people may have a different high low on some of those spikes and make it look different. But I was actually watching this as well. Not that I'm a big moving average fan, because as we can see, when it moves through, it just goes. But what made me look at it this time as well is that it just tagged it back in March 2022 and started to move higher again. So this would be the first month in 2 years, over 2 years, that we would get a close below if the month of July sees a close below the 84.5 level. And if you look at it this way, yeah, we had some jump back up or so, but then we stopped right around 85. I think this still looks offered to me, right? I do think this still looks offered to me, so I can't really buy it right now. Also, not on the back of the data that we had of late in the UK, the stability that the market seems to embrace for the UK government. And there's one thing, and just 1 minute on that. It looks as if the Starmer and himself and his government is wanting to mend, is perhaps a big word, but arrange different, make different arrangements with the EU. And if there would be any positives coming out of that for the UK, I think that is one just small thing lingering under the surface that may actually add to a bit of the positiveness in the sterling. But of course, we will have to wait and see what comes out of that. But it is a possibility that is not negligible in my opinion. And in the meantime, yeah, I know there's supports, but I do think that this still looks pretty heavy to me, this euro sterling. So I prefer to side with Ryan and be short of this right now. Cable, yeah, the obvious level here, 128.90s, 129. That's your level, right? It's the gateway to 130. And in case of a lower CPI this afternoon, I guess this is going to be toast, and we may have a swift move up there. Don't forget, we do have a prior high here, which is around 130 as well. So there could be a bit of activity around this level. I'm long, and I won't refrain of taking some more off. It could get volatile on that CPI, especially if it's a negative one, I think. So I hope you guys have guaranteed stops to sorry, to get a decent trade if you need or want to buy through 130, because it could get really really fast. Downside, small levels, 128 and a quarter. 128, the figure also always the big figure, a little bit psychological, and then we are going to look at 60, 65, 75 if the CPI would overshoot. I would say it's going to take a decent overshoot to take it below 128, this cable right now, because the mood of the market for the sterling right now. So I think that would already trigger a bit of raising eyebrows or see a quick stop run, and then we may start to get back higher. This is how I rather trade sterling right now. As I said, I took some off towards in this early morning rally again, so my position is lighter. I can move it around, and I'm actually looking to buy a dip if we get closer to 128. Euro dollar. I think the market must have ran a bit short in euro crosser still, and that's why we see the euro ticking up together with the rest of the dollars being a bit under pressure versus the majors. 108.60, 108.60, 70. That's your first level that needs to give way, and then people are going to look at 109 and 109.15 topside if we would get a weaker CPI. But look, overall, what we are doing for those trading a little longer term than just the intraday, we are still in this triangle that we started to build back in 2023, a year ago. And it's going to have to take out 109, 70, 80, but call it 110 to really, really, really get going. Does the euro have this kind of strength in it if we would get a lower dollar CPI? I'm really not sure. I mean, my heart says no, but you never can say never, okay? But it's not my preferred to own. Euro is still not my preferred currency to own, unless let's do politically, unless Macron gets his act together and all of a sudden he forms a government, in which case we may see a bit more of those euro crosses ticking up, and then the euro dollar will be much cleaner, of course. Downside, well, the figure for a starter, then we know that, 95 figure, then we know that there was always activity around 107.60s if we would get a sticky or even higher CPI print. So that's going to be a reasonable support zone, I reckon, at those 107.60s. But yeah, I mean, if you get a weaker CPI, you're going to be laughing if you're still long. Then Ali, if it breaks above 108.70, we could see really a relatively fast run up. That is the view on the euro dollar. And then Gold, third session in a row. I'm just going to repeat this every time it happens. Third session in a row that Asia bought it. So that is still where it is. Regardless of the levels, as I was saying yesterday, it is something that I keep a very close eye on, because if they decide that they want to own some, we are going to find support on setbacks in gold. So if you get a bit of a stickier CPI, I wouldn't rule out a move back to 2360s for a starter. If it's a really sticky one, 23.5, but be very careful to see what's going on there, okay? I'm not going to change my relatively bullish view for as long as we start to trade back below 2340s, but let's see. If in turn we get a weaker CPI, this is probably going to go for a walk again. I wouldn't think that this high is going to be strong enough to cap anything. I think if we see a weaker CPI, this is back into the 24s, then why not in the more medium term pushing back up into the 24.5 zone. That for gold. Anything else you guys want to watch before? It's already, I'm looking at the time, it's already past the hour, but this is one in case CPI really gets sticky again. Dollar Swiss 90.25, guys. Watch this level. If this breaks, this is $1 that if the dollar regains strength, this is $1 that can go for a walk again. So we always try to prepare for both sides of an outcome on the data. So watch the dollar Swiss 90.25. This is what's happening. Yeah, euros is an interesting one, Angela, right? 160, 160, and yeah, people are looking at the 160.25 because on it's holding up there all the time right now. But I think your big level there is 160 now. It is bouncing continuously off it. I was actually thinking, and I'm always thinking like, okay, give me a rally so I can sell into it again. But it's really holding very, very well. So on this one, I'd rather wait. If that would be the direction of the euro still in a whole, I'd rather wait for a break, because for as long as it doesn't break, it's holding. Okay, so yeah, could be a decent one if the euro catches a bit as well, Angela. Yeah. And actually, in case of negative risk, a negative risk move on the back of CPI, euro commodities tend to be a bit bid. That is one of the correlations that is that's going around quite a lot of times. So keep that in mind as well. And with that, back over to you, Ryan. I overextended my time.
Thank you very much, mate. All well and good. I'll just take you back quickly. Ali, I'm not sure about your euro-dollar trade. You got in at 40. You cut 60% at 20. And then you rebought it down here for a long up there. It just, through my eyes, it looks like you're trying to chase a trade rather than plan for a trade. You know, for me, the level's down at 108, 107.90s. In here is just nothing. So I don't know what your idea was buying it in there. Maybe you need to let us know. But you've got an average of about 23, I think now, 47 and 40 and 7. 07. So yeah, you're on side, so you know where your average is roughly at 23. So maybe use that as your break-even stop point if that's what you want to do. But it feels like a trade that you're just trying to force rather than picking your levels. But you'll know the answer to that one, right? Guys and girls, thank you very much. Please trade safe over CPI data and everything else. Don't want you to have any horror stories. We want to see you making good pips. Let us know how you get on tomorrow when we join you all for the show. Thanks a lot, Kate, as always. See you tomorrow, folks.
I'll be out tomorrow, so you'll be in the driver's seat.
Yeah, I'm on my own. Who wants to come and join me? I might pick one of you viewers. You can come and co-host with me. We'll see. Anyway, have a good one.